If you can master supply and demand, you'll be able to trade with large institutions, find big risk to reward trades, and make consistent profits. In this video, I'm going to teach you everything that you need to know about one of the best concepts in trading, supply and demand. By the end of this video, you'll know what are supply and demand, how supply and demand affect the price, how to mark them correctly on the chart, why price reacts to these zones. Stay till the end. In this video, I'm revealing my exact supply and demand strategy that you can start using immediately. So what is supply and demand? Most people think supply and demand is just price went up from here, or price went down from here. That's wrong. Supply and demand is where institutions place massive orders. Big banks can't place their big orders simply like that. In order to execute their positions, there must be enough liquidity in the market. So instead of placing their all big orders, they buy or sell a small number of their positions. From there, the price gives a big move because a lot of orders get trigger. After an impulse move, they place limit orders of their remaining positions at the same level so that they get a fair price. The level from which big institutions are planning to re-enter those levels, called as supply and demand zones. So when you mark these zones, you're literally marking footprints of smart money. Now you may ask, how to mark these zones? First, look for a strong move. I mean big candles, fast movement, and imbalance. If there is no imbalance, and big candles, avoid those zones. Here you can see, before that big move price was stuck in a small range, that consolidation area is your demand zone. That's where institutions were buying. Now mark the whole consolidation area before the big move. Same goes to supply zone. And that's it. That's how simple it is to mark supply and demand zones. It's simple, but not easy. If you mark every zone, you will lose. Not every zone is a supply or demand. There are some rules you have to follow before marking the zones. First, there must be a big impulsive move with big candles and fast movement. Second, there must be a fair value gap. And third is your level should align with the higher timeframe bias, or trend. If the trend is bullish, only focus on demand zones. Also, if the trend is bearish, only focus on supply zones. If you mark every zone on the chart, you're not trading supply and demand. You're decorating TradingView like a coloring book, so always follow those rules. Now it's time for the bonus. I'm going to share my exact supply and demand strategy with you guys. First, move on to higher time frames such as 4-hour or 1 hour. Here you identify the trend by seeing higher highs and higher lows. Then look for a strong impulsive move. It can be both buy side or the sell side. In this example, we have a strong impulsive move in the buy side with big candles and fast movement. Now, mark the last consolidation area or a candle before the move. Keep in mind your demand or supply zone should cause break of structure, and imbalance should be present near the zone. Now wait for the price to reach your zone and show confirmation. For the confirmation, we move on to 5-minute time frame. Here wait for a market structure shift. After the shift in structure, look for a fair value gap. We'll enter from this fair value gap. Stop loss will go below this structure low to be in safe, and target will be near Asia high because most of the liquidity will be present here. So simply, we will target the nearest liquidity area. Watch how this trade plays out perfectly. This is how you can trade using supply and demand. If you found this video helpful, subscribe to this channel. Also comment down the topic which you want next. See you guys in the one.